What is the difference between EBITDA and net profit? Let us understand. Let's take the help of this simple statement. Look at here, from sales we are deducting operating expenses and we are getting EBITDA. EBITDA stands for earnings before interest, depreciation, taxes and amortization. So 100 minus 60, you have 40. And from that, let us deduct depreciation and amortization. In this case, it is assumed as 10. So when that is deducted, what you have is EBIT, that is earnings before interest and tax, which is 30. And from that, let us deduct interest of 12. What we have now is earnings before tax, that is 18. And let us deduct tax 5. What we have is earnings after tax, which is 13. Here, our comparison is between EBITDA and earnings after tax. We call it as profit after tax or net profit. In what way these two profits are different? Let's first focus on EBITDA. Look at here, EBITDA is the profit that is available before providing for items like this. It means this profit basically focuses on operational performance. Yes, business is making this profit purely out of operations. It means this profit is not affected by capital structure. Why I am saying this? Because the way in which business has structured its capital will influence the net profit. If the business is going to have debt, then there will be interest which will reduce the net profit. If the business is not going to have debt, then there will be no interest, then there will not be any impact. Okay, so what is the profit before giving effect to capital structure? That's what EBITDA gives you. Number two, EBITDA is also not affected by tax. Yes, tax comes last here, right? So what is the profit business has made even before providing for these items? So I can say EBITDA focuses mainly on operational performance, and this is the profit generated for overall capital employed in the business. Why I'm saying this? In business, capital can come from both debt and equity. While the equity shareholders are going to focus more on earnings after tax, people who have given debt are going to look at profit available for interest and principal repayment. So for them, this profit is important. So we can say it is this profit which is going to decide what is going to be available for lenders, what is going to be available for owners. Having discussed about this, now let's put our focus on net profit. Net profit is the final profit made by business, because this is the profit available after providing for all expenses, all taxes, interest. So this is the final profit, and we can say this is the profit made for the owners. So this is the overall profit available for all stakeholders, whereas this is the profit available exclusively for owners. Next, let's see who uses EBITDA. EBITDA is used by investors, lenders, PE firms, management for various purposes. Investors, they are going to look at EBITDA, and EBITDA multiples are going to be considered in valuations. Lenders will be looking at EBITDA to understand the overall operational efficiency. PE firms, again, yes, they are going to look at EBITDA multiples and also to understand operational efficiency, and management for various analysis and decision making matters. Whereas net profit is going to be used by number one, shareholders, because it's this profit that is available for them for their investment. So this is a primary number they'll be looking for. Then equity analyst will be looking at net profit for equity related analysis, and management is very concerned because it's only through these numbers they can satisfy the major stakeholder, that is shareholders. And tax authorities are going to look at this number because taxes are levied on this, and lenders, they look at this number because loan principal repayments are going to happen out of this. So to conclude, we can say EBITDA focuses on operational performance and net profit focuses on overall profitability from shareholders or owner point of view. If you like this, do not forget to follow, comment and share. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents. multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.